Minds4biz Inc., an online business school/employment agency. Business startup, advertisement and marketing, business growth and problem solving. Accounting. Financial forecasting. What is financial forecasting in business? Financial forecasting is the process of using past and current financial data to make educated estimates about future financial states. It's a tool that businesses and governments use to plan and adapt to uncertainty. Businesses. Financial forecasting helps businesses predict risks, opportunities, and challenges and plan for what comes next. It can also help startups attract investors and lenders by showing when they might see profits. Governments. Financial forecasting helps governments evaluate fiscal conditions and guide policy decisions. It can help identify trends that may impact government policies, strategic goals, or community services. Financial forecasts are based on reliable modeling and accurate information and are an important part of the annual budget process. They include estimates of revenues, expenses, cash flows, and debt reduction. A full financial forecast is made up of 3 parts: a balance sheet, a cash flow statement, and an income statement. Some methods used in financial forecasting include calculating line items as a percentage of sales. This method involves calculating line items like cost of goods sold, COGS, inventory, and cash as a percentage of sales. Simple linear regression. This method uses a linear relationship between independent and dependent variables to create a trend line. It's easy to implement, low cost, and can identify trends, but it's limited in handling complex relationships between variables. Unlock your business's potential with our comprehensive business support services. We assist with business startup, advertisement, marketing and sales, business growth, and business problem-solving information. Our landing page. On our website, we will answer the following questions. Who should be responsible for financial forecasting for your business or organization? Why is financial forecasting a vital tool for businesses? What are the step-by-step procedures for drafting a financial forecast? Are there any forms, documents, templates, or software that can be utilized to forecast a business or organization's financial situation? What information can be included in financial forecasting? How much time should be spent forecasting a project? Why is good forecasting important? What can forecasting do for a business or organization? It's clear that by reviewing the previous questions, it is best to solicit the assistance of our remote business support service providers who can easily answer the last business-related queries and make sure that they assist you with financial forecasting for your business or organization so you can predict the future. Here are the details of what an accountant can do for your business or organization. Who should be responsible for financial forecasting for your business or organization? In many organizations, the Chief Financial Officer, CFO, or a similar top-ranking financial executive typically holds the overarching responsibility for the budgeting process. This individual collaborates closely with different department heads to ensure that the budget aligns with the organization's strategic objectives. Yet, the responsibility does not end at the top. Department heads and managers are fundamentally involved in creating budget proposals for their respective areas, highlighting the necessity for a robust understanding of budgeting and financial planning. Why is financial forecasting a vital tool for businesses? Financial forecasting is a vital tool that allows small businesses to predict future revenues, expenses, and capital needs. This is based on historical data, market trends, and projected company growth, all the ingredients necessary for valuable business insights. What are the step-by-step procedures for drafting a financial forecast? While some events like the pandemic cannot be foreseen, financial forecasting attempts to see into the future to help businesses succeed, removing as much uncertainty as possible. Solid financial forecasting can do just that by giving businesses the tools to build on success and plan for hard times. Here are some steps to follow in creating a financial forecast. Step number 1, define your time frame. Step number 2, decide on a qualitative versus quantitative forecast. Step number 3, gather historical data. Step number 4, sort through new data. Step number 5, analyze. Step number 6, present the forecast. Step number 7, compare the forecast to reality. The work of forecasting is not done once the report has been presented. A company's actual performance should be compared to the forecast as time goes on. Comparing real data to the forecast helps pinpoint where the business didn't quite measure up to expectations and where it was on track or did better than expected. These comparisons enable executives to make adjustments when needed, and they also help keep future forecasts accurate. A financial forecast is one of the most important and informative stories accountants can tell business leaders. Creating an accurate, easy-to-understand forecast ensures that the story hits home and helps executives plan and guide their business successfully. Are there any forms, documents, templates, or software that can be utilized to forecast a business or organization's financial situation? Yes, several forms, documents, templates, and software programs can be used to forecast a business or organization's financial situation, including pro forma statements, financial forecasting spreadsheets, and dedicated financial forecasting software like Vena Solutions, Anaplan, Planful, and Workday Adaptive Planning, which often utilize features like scenario modeling and data analysis to generate future financial projections. Key points about financial forecasting tools. Pro forma statements. Spreadsheets like Excel. Dedicated financial forecasting software like Vena Solutions, Anaplan, Planful, Workday Adaptive Planning. Important aspects of financial forecasting tools. Data integration, scenario modeling, reporting and visualization, collaboration features. What information can be included in financial forecasting? A financial forecast typically includes information like projected revenue, anticipated expenses, estimated cash flow, balance sheet projections, key performance indicators, KPIs, market trends analysis, potential risks and opportunities, best case and worst case scenarios, and assumptions made regarding future economic conditions, all based on historical financial data and current market insights. Key components of a financial forecast. Revenue projections, expense projections, cash flow analysis, balance sheet projections, profit and loss statement, key performance indicators, KPIs, market trend analysis, sensitivity analysis, risk assessment, assumptions and justifications. Important considerations when creating a financial forecast. Historical data, market research, qualitative factors, time horizon, scenario planning, financial forecast definition, planful. How much time should be spent forecasting a project? The amount of time spent forecasting a project should depend on the project's complexity, the availability of historical data, and the level of uncertainty involved. But a good rule of thumb is to dedicate around 10 to 20% of the initial project planning phase to forecasting. This could translate to several hours or days depending on the project size. Key points to consider. Project complexity. More complex projects with many dependencies will require more time for accurate forecasting. Data availability. If you have a lot of historical data to analyze, forecasting can be faster, while projects with limited data may require more time for estimations and expert judgment. Project phase. Early in the project, focus on initial forecasting, then regularly revisit and update the forecast as more information becomes available. Why is good forecasting important? Resource allocation. Accurate forecasts help in effectively managing project resources like personnel and budget. Risk mitigation. Identifying potential issues early through forecasting allows for proactive risk management. Stakeholder communication. Clear project timelines based on forecasts enable better communication with clients and stakeholders. Strategies for efficient forecasting. Break down tasks. Divide the project into smaller, manageable tasks for more precise time estimations. Use historical data. Analyze past project data to identify trends and patterns that can inform your forecast. Expert judgment. Consult with team members who have relevant experience for input on task durations. Contingency planning. Include buffer time in your forecast to account for unforeseen challenges. What can forecasting do for a business or organization? With a forecasting process, Items that are not selling up to their original forecasts can be addressed early and adjustments can be made based on the sales trend. Production can be canceled or redirected, pricing can be adjusted to increase demand, or marketing promotions can be increased. We value your curiosity. If you could ask our business professionals one question, what would you ask them? This stream video presentation was designed to encourage you to go to our company website where we can assist the self-help entrepreneur with tips on what you are paying for when you purchase business support services provided by our remote freelance business professionals. Even though some entrepreneurs wear many hats at startups to focus on running a business well, successful entrepreneurs, microenterprises, small businesses, mid-sized companies, and large corporations select business support services outsourced. Why? They want to delegate duties and responsibilities to business professionals and remote staff to keep up with increased workloads and outsource work assignments and projects to business professionals and staff to reduce business operating expenses so that they can focus on their core reason for conducting business. First-time free consultation. While you may have already chosen one or more of our business support services provided remotely by our business professionals, we understand the importance of a free first-time consultation. Virtual meetings can be used to answer the many questions that most business-minded people have, and this is done free of charge with no obligation to buy at Minds4biz Incorporation. Your online conference meeting with one of our business professionals lets us know your needs and preferences, ensuring that the service order and business proposal we create align with your business-related needs, goals, and aspirations. It also allows you to experience our remote proficient online business support service center and understand how we can add value to your business. During your scheduled virtual conference meeting, you can discuss your business needs, get answers to your business-related questions, and better understand how we can better serve you. Minds4biz Incorporation invites you to take the next step and schedule a remote meeting with our remote freelance business professionals. Click the free consultation button on our website, fill in your details, and select a convenient time for your first virtual meeting with us. Thanks for taking the first step towards enhancing your business operations, and your first meeting with us is free of charge. Why not select business support services provided by one of our independently contracted freelance business professionals today? We eagerly await your response and would love to serve you. Please visit our company website, www.minds4biz.org, to get your business-related questions answered and click on our first-time free consultation button.
Video link.
https://www.minds4biz.org